Alright, I know I said don't worry about these earnings, but here you go. You gotta talk about Fitbit's earnings. What's going on with Fitbit? I think it's pretty interesting to take a look at this stock and see what's going on. Obviously, with the upcoming acquisition by Google's parent company, Alphabet, it's still interesting to learn what exactly is Google going to be getting with the purchase of Fitbit. What are they going to be getting in terms of value? So I think it's important to look at what these shares have to offer, what this company has to offer. So Fitbit's down 1.25% after hours right now, after a quarter which was, in my opinion, pretty darn bad. So they went ahead and posted a non-GAAP EPS of negative 12 cents, which missed by 15 cents, and a GAAP EPS of negative 46 cents, which missed by 42 cents. That is a very, very, very significant miss in terms of, oh my gosh, in terms of EPS, that's a significant miss. I mean, this is a company that is losing money. That's an alarming rate of losing money at this point. We're talking about negative 46 cents. That is a lot of money lost. Revenue of 502 million, which is down 12% year over year, and they missed by 30 million on that as well. Other than that, obviously we see wearable devices sold total 6 million, which was up 7% year over year, but the average sale price, ASP, dropped 19% year over year to $81 per device due to high promotional activity and the introduction of lower priced devices like the Inspire, stuff like that. Adjusted gross margin was 26.3% compared to a 36.2% consensus. That is rough. Company won't hold a call or provide guidance due to its pending acquisition by Alphabet. So I don't know what the guidance is that they're looking at here. It'll be interesting to see. One thing I really wanted to mention here is obviously in terms of the wearables market, Apple is giving Fitbit the hands. I mean, they're giving hands out. Have you ever seen anyone just taking a smackdown? It's Fitbit right now in the wearables market. So this is a market that could potentially be valued at up to $25 billion by, that's right, 2019. That alone, this is a market that is just continuously rising. Wearables are becoming really just where it's at right now. And typically, most of it's going to be through smartwatches. And when you think about it, Fitbit does carry some smartwatch products, but they're not nearly as full-fledged as something like an Apple Watch. They really aren't. And obviously, you do see that relative to the price, but it makes you consider, why would anyone go with a Fitbit when they're much better off getting an actual Apple Watch, something like that, or even a Galaxy Watch. It just doesn't make sense anymore. Fitbit's a lot more limited in what it can do, especially if you think about just a base model Fitbit, like the Charge. I mean, this thing it's really just a health monitor almost. It's not a smartwatch, and that's what people are into right now. The whole trend is smartwatches. So what kind of a market even exists out there for Fitbit if they're not really just focusing on that? I don't know if there is that much of a market for them in terms of having a wearable device that is not a smartwatch. I don't think that market necessarily exists, and I think you really see that in this stock getting hammered. I think you exactly see it that way. I don't think Fitbit creates a bad product. I think they do create a good product, but I do think overall that there's not much that this company has to offer right now. And I really would like to see what Google can do for them, because at this point, I'm really debating what this company has to offer. So now they've turned into an unprofitable mess, right? Not only are they unprofitable, but my gosh, you're declining revenues year over year at a pretty good rate. If you're declining over 10% in a year, it's a pretty bad period, especially because quarter four is it's supposed to be their big quarter. There's a lot of key things that come up with quarter four that you think about. It's the holiday season for them, so Christmas is involved in that. So you're expecting big sales for Christmas. And on top of that, you also have New Year's included in this quarter, which, let's just be fair, everyone's lying about their New Year's resolution. They wanted to get fit, so they bought a wearable device to track their steps, to keep them on time with workouts, stuff like that. But it looks like they weren't buying Fitbits. They may have been. They did increase the total sold wearables, but they sold the lower tier Fitbits. They did not sell the higher ones, and therefore, company gets rocked because of it. So the question is, what does Google have to do now with Fitbit to actually get them to get some of that market share back that they once had? I do think, obviously, just everything Apple touches, they pretty well find success in. I don't think there's any denying that. So I think it's going to be very tough for Fitbit to find a way to penetrate back into this market. Really, it's going to be on Google now. So I'm interested to see. This was a pretty bad earnings, and really the stock isn't down worse just because of the fact that this Alphabet acquisition is happening. The volume's pretty light because a lot of people are just waiting for this acquisition. So overall, this stock should be getting decimated today, but I mean, it's what investors expect at this point, and they're just waiting for the acquisition to go through. So nothing too crazy for Fitbit, but I just don't know what they're going to do from here on out. They're going to need a whole new business strategy, in my opinion, to get back into the market, and for Fitbit to find success with Google as their parent now. Alrighty.